Hi everyone, Adrian Pessel here. Today's topic is going to be reading the market. Why do you want to know about reading the market? It's the first step you need to do in order to counsel your buyers and your sellers. You want to talk to them about strategy, timing, pricing, and know the competition. Instead of just repeating what you've heard, you want to become the expert that you can actually speak to what's going on, what the market has been doing for the past 3 years, 5 years, what's history like, what has happened. You want to be the person that actually knows what's going on and know that you're interpreting it in the way that it should be. You need to know the meaning behind it. That's understanding history. So we are going to go into smart charts, and I'm going to show you how to look at the history of the areas that you work in. And this is not something you have to do every week. You're just going to do this one or two times, and you're going to get a feel for what's going on for the past 10, 20 years, and you'll be able to see the trends. Because the problem is most people, when they get their stats, it's one point on the graph. You need 5 to 10 years in order to follow a trend, not 2 months. So let's go into smart charts, and we'll go into a little bit more detail. When you first log into smart charts, you're going to get a view that looks like this. It's going to probably say the Mid-Atlantic region right here. And you're going to put the county that you're going to want to work in. For an extra fee, you can pay to have the upgraded, the pro version of smart charts, and then they'll be able to give you zip codes. But for our purpose today, that type of report isn't necessary because we're looking for long-term trends. We're looking for what the market's doing in maybe the DMV, maybe just Northern Virginia, maybe just Fairfax County. When you click into that and you get your county, you're going to see they're going to give you two different choices that you can view what's going on. Local market insights and the detailed reports. We will go over both of them today. The first one we're going to go through is the local market insights, which is on this side. This one is going to be great for posting on Facebook. And also, this is the one that's really easy to use for when you want to do multiple year reviews, because each one that you pull out will cover 2 years. It gives you year-over-year comparison, 5-year averages, and month-over-month. You can see it's separated into categories. There are some more information, but we're just going to stick to these topics today. New listings, and it gives you what's going on in the month of March. New pendings and new closed sales. And it also gives you year-to-date and the previous years. So let's look at it. Here we go, the new listings that we just talked about. Then it's going to go into from February. The listings are up by 57.5% from last February. They are down 2% from last March. So this is what I was talking about before. You could hear inventory is down by 2% from last March. Or someone could spout out the information, oh, listings are up by 57% since just last month. Both of those can conjure up a whole different view of the market that could make people have a different opinion of, are we in a seller's market, buyer's market, is the market changing? But in and of itself, they really don't mean anything unless you have a full view. Now, the nice thing about this view is that it does give you comparison a year to date. Last year, just a little over 5,000 listings. This year, we're at 4,868, and a 5-year average for the month of March is 2,500. So the reality is we're just down a little bit, but pretty much for the past 5 years, we're pretty right on target for the month of March. You want to become the market expert. We're going to take this information, and you can do the same thing for pendings and closed sales. And I'm going to go back and pull market insights in 2-year increments. Why? Each listing gives me the year before and the month before, so I can have a really full picture of what's going on. So after I printed out maybe 10 sheets of paper of the past 10 years, and again, all I need to do is alternate the years, and I can have them 20 years worth of information if that's what I want to do. I'm going to put that information on a piece of paper. Now, whether I just put it on a plain sheet of paper and I use a calculator to add it, or I want to use Excel, this isn't complicated. This isn't meant to overwhelm you and say, oh, I'm not good at numbers. All it is for you to just see and just look at the numbers from a 10-year view, a 20-year view. What's the norm? And so this way, when you get the monthly stats that inventory is up or inventory is down, and put it in the proper perspective. And you're not just going by what somebody else tells you. This way you can counsel your buyers and your sellers. We can look here, active listing, 1756, new listings on the market, 23, closed sales, 1159. Not only is it the number of listings and the new listings coming up on the market, and the amount of buyers that are actually closing, it's also the ratio between them. And again, you don't need to use a calculator to really get all down in the weeds on this. You just use your common sense and look at it and know what's going on and say, aha, things are starting to shift. I need to adjust this. This comes in very handy when you have a seller who says, I want to try a higher price, instead of just saying, well, that's not a good idea because things, if they don't sell within the first 2 weeks, buyers might not like it. And you give this same speak that they hear from everybody else. But if you go into the stats and say, well, look, Mr. and Mrs. Seller, right now, we're at a time where that listing inventory is going up. And it's starting to remind me of what happened in 2006. So we need to be careful with that we don't get behind the market. Or maybe it's the opposite. The listing inventory is going down. And in comparison to what it was 2 years, 3 years, 5 years ago in that particular month, you can see that we have a lower inventory rate and the number of sales are staying the same. This can help your sellers maybe price it a little more aggressively if they can. So if we just look here at the close and we do an average, if we include 2006 to 2009, we have a number of closed sales of 1335. If we exclude those numbers, we have an average of 1379. The amount of buyers in the past 20 years haven't changed. But if we look at the active listings, now we get into a big change here. If we exclude the 2006 to 2009, we have an average number of active listings of 2197. If we look at just the average of number of listings that were during those 4 years, we have almost 5,700 listings. When we have the other 10 years, you have an average of 2,100. So you can see it's not only just the active listings, but it's how many buyers are out there and how does that relate to the years before. This is a little bit more than the absorption calculation that I showed you a couple videos back. It's a little bit more detailed. The absorption rate shows you what's going on right now in the marketplace. But when you go and find the history, you can start anticipating the trends and position your buyers or your sellers in a way that will help them get the most from their money. Your job is to be a counselor to your buyers and your sellers. They give them the information. You have that responsibility to know this information and not just to be somebody with a lockbox key. So I'll get off my soapbox on that, but I want to make sure that you understand this isn't high math. This is just understanding the market conditions. When should you buy? When should you sell? What's going on? Your investors will definitely like this. The other part that smart charts offer is the detailed market stats, and that's on the left side right there. When you go to this view, this section right here is pretty self-explanatory. Over here to the right is what I'm going to go into details because that relates to what we're talking about, and this is what you would probably do on a monthly checkup on what's going on with the market statistics. What I just showed you, you'll probably do maybe once every so often just to make sure you refresh your mind if you haven't saved it, or maybe you have an investor that wants to buy out in Loudoun County, or somebody wants to buy in Maryland and you're not familiar with it. That's a tool that you can use and you can get an overview. Reading the market statistics is probably what you're going to do more monthly. This is the section that I want to go over. These terms are different from what Bright says because MRIS, they matched up a little bit better. So I want to make sure everybody's clear. We have active listings, new listings, under contracts, new contingents, and new pendings and all pendings. And here's our definitions. Active listings are the total of all available listings at the end of that current month. New listings, they're the same thing. It's the new listings that came on during that month. The new under contracts, that's what Bright refers to as pending during that current month. The new contingents, that's what Bright refers to as active under contracts. The seller still wants to continue to have the property shown. The term the new pendings, that's the new under contracts plus the new contingents. They total all the new pendings. The term all pendings, that means all the pendings during the current month plus anything that was left over that did not close the month prior. So with all the information that I just shared with you, I'm going to go over a buyer and seller's market timeline from an outside stimulus so you can see how things work. By understanding the overview of the market, you can start anticipating what the market's going to do. It's not going to give you a crystal ball, but it will help you anticipate and not be caught off guard when the market shifts. Let's say that interest rates is our outside stimulus. Rates go higher. That means less demand from the buyers. When you have less demands for the buyers, that means there's fewer homes selling. When you have fewer homes selling, that means more homes stay on the market. When you have more homes on the market, that means the listings start to compete with each other. When the listings start to compete with each other, that means we have lower prices. When you get lower prices, then you got more buyers coming into the market. When you have more buyers coming into market, you got fewer homes. When you got fewer homes, the buyers compete and then prices increase. That flow chart that sounds so basic and you're like, oh, I know that supply and demand, I get it. But that flow chart relates to the numbers that I just went through with you. Pay attention to the market, know the history of it. Don't let somebody else just tell you the stats. Make sure you understand it. So as soon as you give up responsibility for knowing the market stats and knowing what's going on in your marketplace, you're giving up responsibility as being a consultant to your buyers and your sellers. This is a big part of the puzzle. You're not going to have the impact that you want on your business, with your clients, and in your pocketbook unless you truly understand that you need to take an active role in following the market stats. I'm going to end my video with a quote that's very appropriate for this topic. History may not repeat itself, but it does rhyme a lot, by Mark Twain. I wish you all the best out there, and please remember to subscribe or make comments below.